Let's zero in on the media space and in particular Sun TV, which came out with its quarterly performance. It was resilient in the fourth quarter and you did have the content investment plans that will continue, ambitious growth as well for their subscription revenue, but perhaps the low dividend payout was a bit of a contention this quarter. Let's discuss that and lots more. S.l.Narayanan, he's the Group CFO at Sun Group, now joining in on the show. Thank you so much for taking time out and pleasure having you with us on ET Now. To begin with, there has been strong subscription revenue growth. Advertising revenue as well has been higher this time around. What has been the impact of the pandemic on your quarterly performance and what has driven your numbers?
I must say the pandemic effects wore off substantially towards the end of December. So if you look at the year as a whole, the first quarter, which ended June of 2020, our revenues fell by almost 66%. But that degrowth reduced to about 27% in the September 2020 quarter. And in the most recent quarter, we've actually posted a growth of about 8% over March 2020. So we have had a very nice lift up. If my memory serves me right, we had 126 crores of ad revenues in June. And we touched about 300 plus in the most recent quarter, which is almost 2.5 times the run rate of the first quarter of the last fiscal. So net, the mood has substantially become better. But the real question to ask ourselves is, will we outdo the revenue run rate of FY20? Because FY21, the industry revenues fell by about 20%. People like us who are very heavily dependent on the national FMCG advertisers, we degrew by a slightly bigger number. But this year, everybody is going to grow because the base is so small. But the real million-dollar question that I ask myself is, will we outdo the numbers of FY20? And that's going to be a function of the GDP growth.
Fair enough. Let's just come to a bit of a point of contention, Mr. Narayanan. The low dividend payout this time around, given the kind of cash on the balance sheet, approximately 3,800 crore rupees, just walk us through the reason for the same and whether or not there is a plan in the long haul to buy back, look at a buyback in order to flush out the excess cash in the balance sheet in FY22?
I'm glad you raised this question. So let me set this perspective first. I've been with Sun for more than a decade now. I just completed 10 years. So let's just look at the time period from financial year ended 2011 to the financial year ended 2020. We have distributed something like 5,700 crores. And our dividend payout ratio has never fallen below 50%. And in the year FY20, which is the last full financial year without the effects of the pandemic, our payout ratio was 86%. We paid out 1,188 crores in dividends plus distribution tax out of a profit after tax of 1,385 crores. So there isn't a board which is more focused on driving return on shareholder equity than the board at Sun TV. We've been one of the most generous companies when it comes to distributing cash that's surplus of requirement. We prided our return on equity ratios. It always used to be around 35, 36%. Of late, it has fallen to 23%, but then you don't see a pandemic every other day. So that's the reason why we went with a little bit of caution. And the board has consistently paid out monies that is excess of immediate investing requirements. Even though we have very large projects committed, we have 8 movies under production. One is almost complete, the Rajinikanth blockbuster, which will hit the screens any moment now. And then we have 1 more which is work in progress, and 3 where production started, and 3 more which is in the pipeline, where contracts have been signed and dates have been committed. So in terms of investments, we are extremely bullish on the years ahead. We are also making investments in high quality content. And with all that, we will still have a lot of cash, and the board will certainly take this issue on board and distribute whatever is surplus to our requirement. There's no doubt in my mind on this. Unfortunately, I cannot say anything which is in the nature of a forward-looking statement on a call like this. I'm not competent, and it will also be illegal under the SEBI guidelines to make anything which is speculative. But suffice it to say that the board has consistently demonstrated its resolve to pay out monies that is surplus to our immediate investing requirements.
Given that, subscription growth, SL, has largely been driven by revenues from OTT since the, start of the pandemic, do you actually see double-digit growth coming in the next coming few quarters?
Oh, yes. Oh, yes. Please remember that very few homes have television. I think the FICCI ENY report is just been published. If my memory serves me right, it says almost 30% of households in India are still without television. So that's point number one. And there are very few homes, I think it's less than 10% of homes that have a second television. And the kind of engagement that television has is almost about 235 minutes per day. So it's a very high level of engagement that television has. And in our opinion, there is sufficient runway ahead. Fortunately for me, because I sit in a position where I also look over the financials of our sister company, which is SunDirect, we are very bullish on the growth for subscriptions. And the other big untapped avenue is the smartphone universe, because everybody now wants news and entertainment on the go. Although the engagement levels are not more than 40 minutes a day for mobile phone users, the universe is huge and is growing. About 450 smartphones are in use. And my guess is at least 25% of that is going to be in South India, where people are certainly watching stuff like Sun News and KTV. So we are very bullish on subscription revenues.
Okay. Also wanted to understand what is the update then on the IPL franchise, that's SunRisers Hyderabad. What's the outlook on revenues from this team the second half, and how much of a positive is it going to really spell for your overall books?
Yeah, actually our performance last year, we grew profit after tax by 12%. That is despite a truncated revenue stream from IPL. Ticket sales of about 29 crores we didn't earn. The year before last, we had ticket sales of almost 29 crores, which we didn't earn because it was in UAE and there were no ticket sales. And also the sponsors changed, and we took a hit of almost 12.5 crores on the title sponsor alone. And despite that, we've been able to pull in some revenues. But this year, unfortunately, because of the second wave, it has got impacted very badly midway. We believe that it will revive. Whatever is remaining of the season will happen in UAE. So it's anybody's guess what the distribution is going to be from this year's tournament. But we'll certainly make some decent sums of money.
Okay. You're also, of course, betting big on Sun Next. Tell us a little bit about the subscriber additions, the kind of content being developed, what kind of growth you're expecting from the digital section of the pie.
Yeah, at this point in time, including our subsidiary subscribers, which is basically the subscribers that come through our deals with telcos and other OTT players, we have close to 22 million subscribers. And we're growing very nicely on it. We have premiered some movies. Each time a movie goes on air on Sun Next, we see an immediate uptick in subscriber addition. This will only get better and better, because once the pandemic effects are gone off, we will start creating more content. There is a well-oiled engine between Sun TV, Sun Pictures, and Sun Next. And as you may be aware, our content investments have doubled in the last 4 years. If my memory serves me right, we spent close to 900 crores in FY20. FY21 is an aberration because we didn't have shoots on many months of the year. But we will be spending a considerable amount on content, and there is a very well-developed ecosystem of directors, scriptwriters, and producers who work on commission basis. So the moment things get to normal, you will see a flurry of releases across the board, not just the linear TV, not just the movie house, including Sun Next.
Okay, and do you think we'll see growth returning only by, let's say, FY22-23 once things stabilize? I mean, if we're looking at ad revenues, ARPUs, when do you really see that uptick coming in?
Actually, this year is going to be a growth because we are working off on a very low base. In my mind, if we can grow over the revenues that we recorded for ad sales in FY20, we would have achieved something substantial because that really is the holy grail at this point in time. FY22-23, I'm reasonably optimistic the world would have completely stabilized. The key point to ask is what's going to happen between now and March 22. And the jury is still out. We're just keeping fingers crossed. I can't say more than that without violating codes of engagement.
Okay, fair enough. We won't really push on that front. But just give us a sense as to what the amount is, the overall capex plan on your movie production, on growing your original content, as you said, across all spheres is going to be approximately, and any message to your shareholders?
Yeah, see, the content investments will be largely driven by movies. Because in this part of India, it is movies that drive engagement. So we have, as I told you, we have 2 movies which are almost complete, 3 more in production, and 3 committed. It will be a Herculean effort to get it all out and released in the next 9 months or so. We are not even attempting that. So between these movies, I think we should be spending close to 1,000 crores on movie production, 8 movies. And we will continue to be buyers for satellite and digital broadcast rights. So that's we have traditionally been spending about 400 to 500 crores. If situations stabilize, we should be doing that kind of a number on an annualized basis. So if we see a lot of production coming off the shelf, we could spend at least 200 crores on satellite and digital rights. So we are pretty optimistic that we will spend a substantial sum on content creation. And the message to shareholders is we believe your interests are best served when we grow the top line and the bottom line, protecting margins and driving very high return on equity. And that's it.
Been a pleasure chatting with you. I appreciate your time and thank you so much for sharing with us the vision for Sun TV, your growth plans, content investments, as well as outlook on subscription revenue growth.